I'm going to start off in asking you guys a question. Say you got a guy, 55-year-old, preferred non-tobacco risk. How long do you think that gentleman will live? What's his number?
30.
30 more years? Okay. Now, think about the probability of that 55-year-old male, not female, not preferred plus, preferred, of the probability of them surviving past age 100. You know, what percent chance that he'll make there? Now, the economic reserve is usually how much the carrier thinks that they need. You know, based on my experience, my mortality, the way that I price my products, the way that I underwrite, this is how much money I need to have in conservative investments to make sure that I can pay out my death benefits. Then there's excess reserve. And the excess reserve is mainly by regulation. It's statutory, saying that I look at term insurance and I see a really small premium and a really high death benefit. I want you to hold on to more money than you think, just in case something happens. So they tend to be conservative for good reason. You know, the regulators don't want to see companies not have enough money if something happens, right? But on the other hand, if you make them require too much reserve, then you're making the products more expensive for the end consumer. You're also kind of bootstrapping the carrier in order to allocate those resources towards innovation or other things that would enhance the value to the client. All right, so it's kind of a funny thing that works. Now this is interesting. This is a shadow account reserve. When you unbundle a whole life policy to create these ULs, these no lapse guarantee ULs, you have these timing mechanisms that allow you to allocate a reserve closer to the economic reserve, closer to the reserve that the carrier thinks, and not at the reserve that the regulators think. Thus the advent of the term UL product. Okay? This one here is on a single pay. So somebody gives me a check for the entire amount. This is how much I think I need to reserve. This is how much the regulators think I need to reserve, or make me. Using that shadow account reserve, I'm still pretty darn close to having a higher reserve than I think that I need. So that's why you're seeing the single pay being higher priced and why they're putting limitations on it. Because I have to hold on to that reserve, and there's no interest rate market that I can use in order for my products to perform. With the whole term UL, this is the term product that many other carriers have gone to. It's not pure term. It's term UL, and what they did is they placed a term idea concept on the UL in order to take advantage of that shadow account. And so they're essentially sidestepping those XXX reserves. Well, the powers that be kind of found out about this, and some of them were out for blood last year. You know, the actuaries that are going to impose sanctions and stuff, and it's really kind of calmed down since then. But we really don't know what they're going to do. They're going to be announcing what is going to happen in the future this year. This is kind of the idea that my president and CEO thinks will occur. Jimmy Atkins, going back with Frank T. Giancarelli, my boss, to First Colony. Jimmy is recognized as one of the most brightest actuarial minds in the industry. There's three things they can really do. They can ignore it and say, you know what, the term UL is fine. I don't think they'll do that. They could say, all that term UL that you have on the books, you have to reserve it as if it were term. And that would be a significant hit to a lot of the carriers that have been selling term UL. So I don't think that'll happen. That would just cause too much turmoil. What I think will happen is they'll say, enough at this time. 2012, January 15th, everything forward, moving forward, you're going to have to reserve it on XXX. And so you're going to see a fire sale of sorts of the term UL. Okay? It's very interesting. There was just a article in the Wall Street Journal called Insurers' Reserves Examined regarding all of this about a month ago. And it's going to change our industry. The other thing that may occur is those shadow accounts are also used on pretty much everybody's no-lapse guaranteed ULs. And so depending on the changes that they do in the regulation, we may see all of our UL prices going up as well because you won't be able to use that shadow account on the second guarantee portion of your UL. So very interesting stuff.